Next generation GPS maker NextNav plans to be a public company before year end after saying it will combine in a new SPAC transaction. Founded in 2007, NextNav is being valued at $1.2 billion. The company's technology is believed to help locate a device's specific indoor positioning. Let's welcome in NextNav Chairman Gary Parsons. It should also be noted, Gary's also the founder of XM Satellite Radio. Gary, good to see you this morning. So not a new company, unlike a lot of the other SPACs that have come to market. You've been around since 2007. Yeah. How much business will you do this year, and where is it coming from?
Well, you know, it's interesting. Yes, we're not a new company. We've been developing this technology for over a decade. Frankly, we put together the Spectrum asset that we're building this next generational GPS capability off of back even further than a decade. But we've had to roll it out, get it accepted as an international standard for GPS or a terrestrial-based GPS system. And the advantage of that, obviously, is that, you know, it goes deep inside buildings. It's not as weak. It can't be jammed easily. It can't be spoofed to make it appear you're in some different location. So it overcomes all of the frailties that GPS has historically had. That's where it's coming from. Our initial customer, our initial partner is AT&T and the FirstNet Authority, the national broadband technology for first responders. And, you know, your graphic leading into this was, you know, tracking people inside buildings. But, you know, actually first responders and a SWAT team needs to know where their people are for situational awareness. So that's one of the first market opportunities. And obviously gaming very much utilizes knowing exactly where you are, a Pokemon Go, but also vertical, you know, so it can go different places within cities. Advertising, the mobile advertising and data analytics, you know, the ability to determine foot traffic for a particular shop in a mall, you know, where there's a very different retail outlet on the first floor, second floor, third floor. So all of those are positive aspects. The often overlooked and aspect that was one of the things that got me involved in wanting to do it for a public safety and actually national security issue is the fact that it provides a GPS-like backup timing. And if you're familiar with it, most critical infrastructure in the United States, all the cellular networks, the power grid, financial transactions, they all actually get their timing or clocking off of the GPS system. So it not only from a consumer standpoint or for first responders allows you to know exactly where you're located within a building in an emergency situation, but it also allows in the event of hostile actions to damage the GPS system, or frankly, even a massive solar flare or something that disrupts the satellite systems. You've got so much commerce in the United States today. It's estimated by the U.S. government over $700 billion of economic activity is keyed to GPS. Some of that to its location aspects, some of it's to its timing aspects. But for the last 10 years, we've been developing the product, rolling out the network with our partner AT&T and FirstNet to get it in the hands of the first responder community to save lives and give situational awareness to the first responders.
Hi, Gary, it's Julie here. So you've talked a lot about the potential for this. And of course, we showed some of your revenue projections on the screen, but I guess I'm curious, where is it actually being used today? Or do you know sort of by the end of the year who's signed contracts with you to put this into use and to see some of those use cases that you've talked about come to fruition?
Julie, it's probably good to separate it into two discrete, separate products. One, our Pinnacle product is actually the element that adds the vertical location to existing horizontal location networks. So whether it's a Wi-Fi network or a GPS network, now the blue dot, instead of just moving horizontally, can go up in a building. We only introduced that product commercially just a couple of months ago. So as you can imagine, it is the earliest stages of adoption. AT&T and FirstNet, as we indicated, are our first customers. It's being used by first responders today for their own situational awareness. But we're also have signed agreements with Gimbal, who does, I guess, supports 1,800 different apps and applications, Panera Bread app, things of this. They do in-stadium apps to help you find the location where you go to get your nearest beer. And by doing this, they can using our precise location capabilities, they're able to give you the best direction. The second product that is probably 2 more years away from widespread adoption is the one that provides the GPS backup capability for critical infrastructure. But that's also what provides the certainty and resilience of a signal for GPS for autonomous vehicles, eVTOLs, UAVs, drones, all of those things that have to have a secure location capability. It can't be blocked by a building as soon as you get into a city, or jammed, by a signal. So that's our first customers today. Unity and the Unreal Engine from Epic Games are 2 of the biggest gaming groups that have signed agreements with us, so that you can now provide 3D and augmented reality capabilities to all of their gaming capabilities as well.
Gary, before we let you go, SPACs have gotten really a bad rub in recent months, and in many respects, rightfully so. What type of financial rigor have you brought to the company, and have you built into the company?
Well, I mean, the first thing to kind of understand is both it was a different SPAC that we engaged with. We didn't go through some SPAC off just to get the maximum valuation. We wanted people that knew the industry, that we knew them, they knew us. I go back decades with some of those investors. And then secondly, we've put over $250 million into this company over the last 10 years, from Goldman Sachs, NEA, Oak, Future Fund, Columbia Capital, some of the biggest names and strongest long-term players in the venture capital world. So, we've always had a view for the long term on this. And we think that's an important element to have that stability. But now, as we're getting to finalize rolling out the TerraPoint network to provide that critical GPS capability, and I would mention, by the way, Brian, we don't have any money in our plan from federal government support. But clearly, this is a huge activity at Congress. It's actually one of the few bipartisan things you're ever going to find. To have Ted Cruz and Ed Markey as the lead sponsors on this are about as diametrically opposed as you can get. But they all recognize the vulnerability for national security. And so we think infrastructure bill-wise, we're likely to get some support out of that as well, too.
Well, price increases for prescription drugs continues to outpace inflation by many measures. That's only added to growing cost of healthcare. GoodRx says it has a solution, and it's helped Americans save roughly $30 billion on prescription drug costs so far. Let's bring in Doug Hirsch, the co-CEO of GoodRx. We've also got Yahoo Finance's Anjalee Khemlani joining in on the conversation. Doug, always good to talk to you. It feels like this is kind of this age-old question of how do you tackle the issue of rising healthcare costs? What's the magic solution for GoodRx?
Honestly, it all starts with just being transparent and open and keeping healthcare simple for consumers, because it's too complicated in this country, and it just creates confusion and fear, and then people just don't get the healthcare that they need. And so for a decade now, our whole focus has just been on keeping healthcare easy so the consumer can come in, look up a drug, see a price, get a coupon, show up at the pharmacy. I mean, we're trying to make healthcare act like every other industry, and it's just so hard because of the confusing nature of our system. But we think we've made a lot of great progress.
Well, on that progress, Doug, of course, we've talked multiple times about how the discount is something that people know about now. They're familiar with your company, and you also have a lot of information for them to get better educated about the system. But what's left? What are the existing barriers still that prevent us broadly in America from getting better drug prices and from getting transparent drug prices?
Sure. I mean, our focus at this point is on all of healthcare, right? I mean, we've spent 10 years focusing on really just trying to hammer down the cost of those drugs Americans take every day, those generic drugs that make up 90% of, of the drugs Americans take. But there's brand drugs, which we've started to make tremendous progress on. And of course, there's the rest of care. We have a telemedicine service. We do mail order prescriptions now. It's a $3.6 trillion market, and we're going to continue to focus and continue to work hard until all Americans can find affordable care in some capacity.
And one of the things that I think this report pointed out as well is that individuals who have trouble affording generally things in their household or generally having struggles with their finances do find some relief through the savings that you provide. What does that look like moving forward? Are there partnerships that you can engage in or other ways to sort of spread the savings?
The story's even bigger than that. And one of the things I'm so proud of is that, as you said early on, we've saved Americans $30 billion. But think about what that means. The $30 billion, if you break it down, actually increases adherence. And that's fancy medical speak for meaning people just literally continue to fill their drugs. And we found over 78 million prescriptions. Thanks to GoodRx, people took them. Otherwise, they simply wouldn't be able to afford them, right? And then, of course, when people take their meds, it leads to better outcomes, meaning in actually just one category, if you look at high cholesterol, there were over 1,000 avoided hospitalizations and actually 500 avoided deaths that people had just by simply finding affordable drugs. And then, as you said, Anjalee, then that leads to, I think it costs a low-income family in America a minimum of $45 a month just to eat healthy. And GoodRx saves an average expected cost of $60 per prescription. These are real numbers that make a real difference in America. And so we're just really, really proud of this impact, and we intend to continue growing it as we continue on.
Sorry, when you look at kind of the breakdown there, as we were just showing there, Doug, where users are using GoodRx to kind of have savings on some of these medications, I mean, how important are those ones that you're seeing them use it for? Because you think about the scale of some of these issues that Americans deal with, those are the ones where you make small impacts. They actually add up to rather large savings when you look at it on a national scale.
Well, we all know that when you show up in an ER, it's like a, $10,000 event, right? And so avoiding the ER is crucial to people, right? Meaning find them a doctor so they can talk to them without actually going to the ER, because too many Americans actually use the ER as their doctor visit, and that's totally inefficient and unnecessary. And then, of course, keeping people on these prescriptions so they don't end up getting sicker, don't end up getting diabetes. I saw a stat recently, like 1% of the US GDP is actually for dialysis, right? Well, let's stop people from getting end-stage renal failure, get those insulins cheaper, let's get metformin and other simple drugs that keep people from getting diabetes or keep people who have diabetes from getting more sick. I mean, that's really what we're focused on, is just trying to keep people healthy, make preventative care so inexpensive that any American can do it, and no American has any excuse to not be able to get that kind of care.
Well, what's the formula for this, Doug? Because I know, as you mentioned, there is a lot of focus on emergency room visits and the cost of that, and telehealth has always been viewed as a way to filter out more costly visits that are unnecessary. And there are others getting into this space. You do have competition with those who want to also help individuals with lower cost and access to drugs. But what moving forward, separates you? Is there anything that when it comes to, being able to do more in this space, are there things that are not available yet for us to be able to make more progress?
I mean, we want to focus on not just finding people solutions when they are actually sick or when they need a medication or need care, but actually anticipating, right? And so a lot of our focus these days is on continuing to engage with consumers and being able to reach out to them prior to them having an issue. Like, hey, your pill bottle is going to be empty, or hey, you overdue to see your annual visit to your primary care physician, right? So we think that a more anticipatory healthcare system is really the best design, where we can reach out, make sure people are staying healthy, make sure people are doing all the proactive things they need to do. Hey, it's time for your flu shot. Hey, have you gotten your COVID vaccine, et cetera? Continuing to reach out and making sure that people are just being proactive about their care and, of course, proactive about their cost. And so that's really what we spend our time focusing on. I do believe that our healthcare system can get there and not be so reactive and not just have more ER visits, but really continue to anticipate healthcare needs and maintain health as opposed to then trying to fix the problem once it develops.
Well, that $30 billion savings certainly points to a move in the right direction. Doug Hirsch, co-CEO of GoodRx, good to talk to you today. And our thanks to Anjalee Khemlani as well. Let's bring in our first guest for the hour. We've got Josh Lipsky, Atlantic Council's GeoEconomics Center Director. And Josh, you heard Brian there say, is it time to talking about tapering? What do you expect from the Fed this time around?
Right. So in that dichotomy Brian brought up, I'd say I'm on team transitory. And I think most of the Fed governors are still there. And of course, this idea that are they going to talking about it? They're always thinking about it. And the real question is Powell going to blink at this meeting? And is there going to be some language shift that people are looking for when it comes to tapering? And I think the answer is no. And we can think about the G7 central bank governors meeting that happened 2 weeks ago. They were all together in the room. They were thinking about these issues together. Christine Lagarde at the ECB came out of that. She said last week, they're not changing their policy. I think the Fed is going to do something similar this week. And it's really Jackson Hole in August when we're going to start seeing the shift in language. So I think it's steady as she goes. Let's see what happens over the summer. Let's move through some of these base effects that are really distorting the numbers. Let's see how permanent some of these supply chains issues can be. And then let's get to Jackson Hole and maybe start telegraphing a tapering process.
Yeah, and Josh, I wonder if it's more, kind of the global state of things right now that might be helping the Fed work through taking a little bit more time to get there, or whether or not their policy, proposals and the way they've been framing all this has worked in convincing the public that the inflation data that we've been getting is just transitory. I mean, when you look at that, and as Akiko points out, the 10-year yield at 1.5, talk to me about how they've been successful in maybe getting people to buy in.
The Fed's been extraordinarily successful in their narrative. They've been consistent, and that's another reason why I don't think Powell is going to break too soon with it. Already we actually see some of the inflation expectations coming down from where they were just a few weeks ago. So that's a credit to the Fed by saying we believe this is transitory and people agreeing with that. And so we're seeing some of that filter into the market. So all of that plus the base effects, I think it's the US situation that the Fed's looking at primarily, of course. And then there's the other issue that Powell talks about so much. 8.5, 9 million unemployed. We don't talk about it as much, but this Fed talks about it a lot. And that weighs heavily on these governors. You saw Governor Brainerd talk about that recently. That's part of the Fed's dual mandate as well. So when you take it all together, take in some of this reversal in inflation expectations, I would be surprised in a signal in tapering right now. Doesn't mean the Fed doesn't need to do it. The economy is still running pretty hot going forward, and you don't need 120 billion a month in perpetuity, but this is too soon, in my opinion.
Josh, I wonder how you're looking at this from a global picture. Obviously, you look at central banks around the world pouring in enormous amounts of stimulus over the last year. Your former boss, Christine Lagarde, talking about how she thinks some of these temporary factors could start to fade out by the end of the year. Which one of these big banks or big central banks do you think moves first?
Well, all eyes still on the Fed, right? I mean, everyone wants to see what the Fed does, and the pressures are hottest in the U.S. And they're a little different in the Eurozone, where we haven't seen the kind of stimulus we saw here. And they've taken extraordinary monetary policy action, but not the same on fiscal. So I still think it's going to be the Fed. And again, I do think it's going to be Jackson Hole. And think about the symmetry of that, right, Akiko? Because it was 2 years ago at Jackson Hole where Powell outlined the new framework. And he said, we want to get sustained above 2%. And everyone said, really? Let's see what happens when push comes to shove. And then it's like a baseball game. You get into the game and the ball finds you right away. Sure enough, the crisis hit and the Fed's hypothesis got tested. So I think it's the Fed that moves first, maybe the Bank of England in September as well. But I think it's the Fed signaling in August and then ECB, Bank of England in September. That's what I see as kind of this back to school moment when we get to the end of the summer.
Yeah, and I mean, we also, I guess, have the benefit of seeing vaccinations working here in the U.S. as we saw the UK kind of extend their deadline here for reversing their lockdown measures. And when you look at that, I mean, how important is that on the global perspective when you think about what we saw out of the G7 meeting here, not just in terms of, boosting vaccine doses around the globe to kind of help this recovery globally, but also the way that they've been approaching taxes and what Treasury Secretary Janet Yellen has been trying to do there to get these countries to work together. How much progress is being made on that front relative to what we saw in kind of the nationalistic stance that President Trump took?
Yeah, if you think about the G7, both the finance ministers and then the leaders, two headlines for me, shots and taxes. And those are two pretty big deliverables. And shots is an economic story as much as it is a health story. And the IMF's been very clear about this. The amount of GDP growth the world could see if we got the vaccine distributed more quickly. Believe me, that was part of the G7 conversation happening this past weekend. They made some progress, probably not enough. And the variants are always worrying. And any of this can sort of make people pause and reverse where they are. Certainly that's true in the UK right now as we track the Delta variant. But I do think what they saw both on the shots issue and then on the taxes was we can make progress together. It is a bit of a return to multilateralism. And 6 months ago, when Yellen announced the global corporate minimum tax as a key agenda, a lot of people said it won't be possible. This has, been talked about forever. And granted, the G7 is just one small step in a broader conversation that has to include the G20 and the OECD, but it's a significant step. And if they get those billion vaccines out there and they get at the G20 in July an agreement on global corporate minimum tax and get China on board, big ifs all around. Wow, that's a pretty big 6 months from a global economic perspective.
Josh, the other headline coming out of the G7 summit as well as the NATO summit yesterday is this collective response to China. You've got this counter to the Belt and Road, this initiative that's been announced. You've also got this tech council that the US and EU has said they're going to establish to ramp up R&D collectively. I mean, how much of that really changes the dynamic with China in countering their influence globally? Has anything fundamentally changed as a result of these announcements that came out over the weekend?
Yeah, it's a great question. So the answer is not yet. And, was a lot to that announcement, Build Back Better for the World. People have been waiting for a long time to see a counter to Belt and Road. But let's think about this for a second. Belt and Road has a 10-year head start. Projects all over the world, including, by the way, in a G7 country, Italy, which is probably why some of that language might have been even more watered down. So it was a good announcement, but a lot of questions remain of how much money is going into it, who's funding it, what projects will be funded, and China is well on its way in terms of their infrastructure projects. So there's a lot of catch up to do if Build Back Better for the World is going to be a real rival to Belt and Road. And on the Tech Council, same thing. Great idea, needs to be done, but the US needs to pass its own China Innovation Act first before it can come to the table and say, this is what we're doing in R&D, let's match it and collaborate with the Europeans. So, on both of those issues, on Belt and Road and on the Tech Council, good announcements, but let's see where we are at the next G7. That'll be the test for me if these things are actually in action.
On that initiative, B3W for short, is what they're calling that Build Back Better. Where's the battleground? Is it in Africa? Is it in other developing regions? Where should we be looking to see if the US along with its allies is in fact making some progress to counter Belt and Road?
It's everywhere. It's such a great question. There's no one battlefield. You can look at other parts of Asia, China's neighbors. You can look at sub-Saharan Africa, but you can even look at Europe, Italy, as I said. Belt and Road is everywhere. And it's also in Latin America. So, the idea that, where we can counter it first, it has to be countered everywhere. And what I think you're going to see happen is actually Japan diving into this and being a leader here. I think they have the most to gain being in the region. I think they're going to want to invest in this heavily. And that would be a pretty significant statement. So I see it first in Asia being the immediate counter, but you also have to deal in places in your backyard in Europe and Italy.
And Japan's got the Olympics, too. A very busy year for them, potentially, if they also get on board with that. But Josh Lipsky, Atlantic Council GeoEconomics Center Director, appreciate you taking the time to chat with us. Welcome back. As we've been covering, more and more restaurants are having to get creative with keeping and retaining talent as the business starts to come back. When we look at restaurants, fast casual, of course, has also been enjoying an uptick here, both pre-pandemic and post-pandemic. And Chipotle is among those latest, passing some of the increases in terms of wages being paid to workers along to customers, as the company said it will be raising its menu prices by about 4% due to increased wages. And it's raising a couple questions now about what other restaurants might follow in doing so and what it means for the company itself. And for more on that, I want to bring on Peter Saleh, BTIG Restaurant Analyst, here back with us. And Peter, when we look at this, you actually have a price target of $17.25 on Chipotle, noting about 25% upside there. Talk to me about how pricing power and really teasing out winners and losers here, if they are going to be paying workers more, becomes important, and maybe why that could be a plus here for Chipotle.
Yeah, so thanks for having me on. Look, I think the labor shortage is an industry-wide problem, and it doesn't seem to be going away anytime soon. And I think you're going to see, yes, Chipotle is one of the few that has announced a price increase and being more aggressive to try and offset some of the margin pressure from having to raise wages. But while they're the ones who have actually announced it, the rest of the industry is moving in the same direction, we believe as well. You're going to just see more and more price increases to offset this. There is a pretty severe labor shortage. I was talking to a management team, not Chipotle's, but another management team a few weeks ago, and they were saying they were part of a job fair out in Michigan where there were 60 other companies involved looking to fill 500 positions, and they only had 4 candidates show up. There is a severe labor shortage, and until that's resolved, I think you're going to see this battle for employees, and the only way to really make them happy is to pay up and give them more benefits.
So, Peter, I wonder how this sets things up, at least in the medium term, because we have heard over and over, especially from lawmakers who've said that, look, the reason there's a shortage right now is because of these enhanced unemployment benefits, which are set to expire, but largely because some workers simply don't want to return to work. And yet we had a conversation yesterday with one company who works very closely with a lot of these food outlets who said he doesn't think that has anything to do with the benefits, that employees just simply have more leverage right now because the demand is so high from them. How did this set things up for some of the big players like a McDonald's as well as a Chipotle that you cover?
Yeah, several weeks ago, we hosted a restaurant called Tech Forum, and we had several executives that opined on this exact issue. And I don't think everybody's in agreement that that is the core issue, this unemployment benefits. I think many believe that workers just want more flexibility. They want more, work-life balance. They don't want the overtime as much. So I think there's a shift in the trend. Clearly, employees want to get paid more and they want more benefits. But I'm not exactly sure how much of an impact the higher unemployment is really making here. I think it's more just employee psyche and what they're really looking for. I think that's really what's driving this. And it does not seem to me like this is a short-term issue. I think this is more of a long-term problem that the restaurant industry and really anybody employing hourly employees is going to have to deal with.
Yeah, I used to work in the industry as well. Back when I was in high school, it was a good job at a Z Pizza, if I can shout them out. But when we talk about, how this is going to set up winners and losers, last time we spoke, you were talking about a franchise mix and the way that that's going to be important to watch here. But when it comes to maybe some of those on the value side, I assume they would be more, more pressured here if they were to raise prices to suffer the consequences. So talk to me about how you're breaking down winners and losers if we are to expect this to hit menu prices in the future.
Yeah, look, I think the larger brands that are more sophisticated and that can move quicker to hire employees, I think those win. I feel like the independents, the mom and pops are going to struggle. I feel like the larger brands have opportunities to increase benefits and provide promotion opportunities and attract employees. So in my opinion, it comes back to the larger brands. It's not necessarily, whether you're value or you're higher end. I think they're all going to struggle and they'll all have to raise menu prices. To me, this is more about how big of a brand are you, a recognized brand versus an independent mom and pop. My guess is that the larger brands have more resources and more ways to attract those employees versus the independents and mom and pops, which really make up about 50% of the overall category.
So if we're talking higher or better benefits, higher wages, that seems to suggest higher costs overall. Chipotle's already raised their prices. Who's likely to follow, and who do you think is best positioned to take the hit, if you will?
So if you look across the restaurant industry past 5, even 10 years, I think the average menu price increase has been somewhere around 2.5% every year. My guess is this year will be outsized. We might be 3%, if not higher, to offset some of these labor pressures, because we're also getting commodity inflation as well. Look, I think you're going to see it across the board from every operator. I think the operators who have taken less price in the past probably have a little bit more that they can take now. Operators like Darden with Olive Garden, they've taken less pricing. I think Chipotle has, in my opinion, probably been a little bit more of a value on the plate to the consumer. They probably have a little bit more opportunities. But you look across the industry, everybody's going to be raising prices, whether it's 2.5%, 3%, 3.5%. Prices are going higher, and you're just going to see more inflation. There's really no other solution other than implementing more tech, which can help offset a little bit of these price pressures.
Yeah, Chipotle at 4%, the first one we're discussing here, but clearly a conversation we're going to return to. Peter Saleh, BTIG Restaurant Analyst, appreciate you joining.
Well, our next guest says that he has diamond hands and has partnered up with BlockFi to encourage others to invest in and earn interest from cryptocurrency. We're joined now by former Bachelor star and partner with BlockFi, Matt James. So Matt, let's just start here. Because cryptocurrency is an incredibly volatile asset, there's a lot of potential for people to lose quite a bit of money. Why do you want to promote folks get invested in and get involved in cryptocurrencies? Where's the appeal to you?
Well, thank you for having me, Kristin. And I think that the appeal is the adaptation that we're seeing taking place. And it's no longer something that is not being taken serious. You have major institutions who are allocating major chunks of their portfolio. You have hedge fund managers like Paul Tudor Jones, who's advising people to put at least 5% of their portfolio into it to hedge against inflation. And 5% might not seem like a lot, but when you're a billionaire, 5% is a lot. So I don't think it's a matter of if, it's a matter of when now. And I'd like to be on the right side, and partnering with the BlockFi helps lead that charge in educating underserved communities so that they don't miss out on this wave that it can be extremely lucrative.
So Matt, talk to us a little bit about your investing philosophy. Do you hold cryptocurrency? If so, what do you hold? And just are you one of those folks who likes to sort of buy and hold for the long term? Are you a little risky? Share it with us.
I would consider myself a Bitcoin maximalist, and I haven't sold anything that I bought in through the dip. Fortunately, I had a little bit of cash reserve, and I was able to load up on what some people were trying to get rid of. But my philosophy is, and I don't see it changing, is a hedge against inflation. And it doesn't look like the Fed's planning on raising interest rates anytime soon. So I just want to make sure that my money is worth more in the future. And one of the seamless ways of doing that is investing in an asset that is trending in the right direction and there's a limited supply of. It's a very simple view for me, and it's a very simple strategy. Just buy Bitcoin and hold.
So is it just Bitcoin that has captured your attention and your interest? I mean, there's more than 5,000 cryptocurrencies out there right now, or are you looking at some others, perhaps Ethereum and maybe even Dogecoin? I have to ask you about it.
Kristin, for my investing goals and financial plans is strictly, again, a hedge against inflation and protecting my wealth long term. And in doing so, the best digital asset for me to put that in would be Bitcoin. Not saying that there's not utility value in owning Ethereum and having a diverse set of altcoins in your portfolio, but for my personal investment and strategy going forward, it's to be in an asset like Bitcoin. And that's why it makes sense to work with a BlockFi. I can literally earn Bitcoin by holding my Bitcoin, which is what I was going to do anyways. And then with their credit card, I get Bitcoin reward by spending money that I would be spending anyway. So it was very seamless in terms of wanting to work with a company that had the same financial vision that I have, as well as similar views. They're co-founded by a woman, happens to be diverse as well. And it plays into the story that we try to tell our students that we work with in these underserved communities. And that's really in doing your own research. And to answer your question earlier about just being invested in crypto in general, I'm not advising anybody to put their life saving into it, but what we're doing actively is educating people on this space, where it's going and how they can get involved. So
All right, all right. So Matt, I want to ask you about the Bachelor franchise, and of course, you made history on the show, being the first Black Bachelor. I know you worked with Chris Harrison, who was host of the show for 19 years. He recently exited after he had, I guess, backed up Rachel Kirkconnell after those racially insensitive social media post. Back when this was all going down, I know you actually went on the record as saying that you didn't think Chris should be let go and that you didn't think he should be part of sort of the cancel culture. Now that he's gone from the show, have your feelings changed at all about that?
I'll tell you this, Alexis. One thing that I learned from the show is that when you have something good and you see something good in your life, you got to hold on to it. And similar to how I took that into my personal relationship advice, I also take that same advice in holding Bitcoin. And as you saw in the dip, I wasn't one who was selling, I was holding, and I'm going to continue to hold and ride this wave out because I have long-term views on my relationship as well as I do on Bitcoin.
All right, that was an artful pivot. I will give you that. Matt, I do want to ask you, in terms of getting paid going forward, would you ever try to get paid in cryptocurrency? I know you used to play football. This is something that a lot of NFL players have actually been talking about lately, getting paid in Bitcoin. Is this something that you're talking about or wanting to be a part of your contracts, your business contracts moving forward?
I would advise people to do their research because when you're dealing with things that are volatile, you're going to have price swings. And if you don't have a long-term trajectory on Bitcoin, then you could be flustered when you see price going up and down in the near term. But if you have eyes towards the future, then I think it would make sense to be paid in a currency that's going to outperform the dollar going forward. I love it. I love what Trevor Lawrence is doing. I love what a handful of athletes are doing their due diligence in, and that's preparing for the future. And if I was still playing sports, I would definitely want a portion, if not all of my contract to be in the form of Bitcoin as well. So hats off to those guys for being trendsetters. And I look forward to seeing men and women in those fields continue to leverage everything that's taken place in the space.
Matt, before we let you go, we all want to know, have you talked to Chris since he left the show? I know he was looking for a $25 million payout. We don't know what he got. He came to some sort of an agreement, but have you guys talked?
What I would say is that the smartest thing that could be done with any of the payout would be to buy as much Bitcoin as possible, because right now it's at an all-time low. If you're looking at the past few months, and I'm hoping that, if you're wise with any of your investments, you're looking to double that money if you see it going to the moon like I do and reaching over 100,000 by the end of the year. So not financial advice.
So your advice to Chris Harrison is to take whatever money he got from ABC and put it into Bitcoin on BlockFi?
I'm saying I think that anybody who comes into a large amount of money should at least consider looking at the asset class because of where it's gone, where it's trending, and what the future looks like, taking into account inflation.
All right, Matt James, former Bachelor star, partner with BlockFi. Thanks so much for joining us today.
Confidence among U.S. home builders fell to a 10-month low in May as rising building materials and supply chain shortages pushed home prices higher, making it harder for some home builders to get loans. The National Association of Home Builders Wells Fargo Housing Market Index dropped 2 points to 81, down from a recent record peak of 90. We should mention, though, anything above 50 is still considered positive. Joining us now is Jerry Howard, CEO of the National Association of Home Builders. Jerry, always good to see you. So let's start with that drop in confidence. What's driving that drop right now for home builders?
Well, you said it. It's clearly the builders are having trouble with their supply chains, everything from lumber to cabinets to appliances. And that is impacting the time it takes to build a house. And the cost increases that are attendant to that are also impacting the builder's ability to get a loan. What I'm worried about is that it's also going to ultimately end up being a problem for the consumers getting their loans as well.
So, Jerry, we have seen those lumber prices come down quite a bit. Do you think that that might fuel more optimism going forward, especially as some of those raw materials are now far less expensive than they have been in the past?
Well, first, let me say we're thrilled to see lumber prices coming down. We think that they were artificially high to begin with, and we're just glad to see it end. However and whyever it is ending, we're thrilled. We're hoping that some of the other increases in price were sort of copycat increases, and we're hoping that they'll start to come down as well. Obviously, if that happens, the demand is out there. The demand has never been higher. If we can start to build housing at an affordable level, and we can make sure that all of these finance issues are addressed, we'll get way more optimistic.
Jerry, I can understand that you're happy to see lumber prices come down. I think lots of folks are for different reasons. But even though they've come off those recent record highs, they are still high relative to where they have been over the past few years. Do you think that just elevated lumber prices are just going to be the new norm going forward?
It shouldn't be the new norm. I don't think there's any reason for it to be. Back in the pre-Great Recession era, we were building about 2.1 million units a year, and lumber prices were only at about $400 per 1,000 board feet, as compared to now when we're building less than 1 million units a year and the prices are what they are. So there's something that we think is artificially inflating those prices. We'd like to see them come down even further. I expect that they will.
Curious to know how long you think that pressure on essentially homebuilder confidence and optimism is going to last, especially, as we do see some of those lumber prices coming down. Do you see it all perhaps an about face in this trend that we saw this month?
I think it's early to say that I expect to see an about face. There are still other supply chain issues out there. I've talked to, for example, a multinational corporation that supplies components to a house. They're still having trouble getting their product offloaded in the ports on the West Coast. I talked to a small local cabinet maker in Alabama. She's having trouble getting employees to come back to work to build her cabinets. And so there's a delay in that end of it as well. Whether you're a large supplier or a small supplier, global or local, there are supply chain issues that have to be addressed. Policymakers can do something about it. And if they do, then I think you'll definitely see not only a reversal, I think we'll go back up to near record confidence if all of these things are taken care of.
So, I mean, you talk to these home builders all across the country, Jerry. How are they dealing with this environment now? How are they changing their business strategies to deal with the higher prices, to deal with the labor shortages?
Well, they're putting escalator clauses in their contracts. In other words, I think the lumber for your house is going to cost X. I think the cabinets are going to cost Y, but they might go up to Z and A. And if they do, that clause is in the contract. Unfortunately, those kind of clauses sometimes scare the consumers off, and that becomes an issue. The other thing they're doing is actually delaying sales, not selling a house until they know that they're going to be able to get the materials, to get the building going, and to get it done in a timely manner. That's a real issue. Some of the larger guys are just not selling until they know they're going to be able to get the materials out there. It's a change in a business practice, but it's one that, at least in the short term, satisfies both the consumer and takes care of some of the builders' issues. Another thing I've seen them do in the South, for example, is lay the concrete slabs for the housing and then just not start to frame it until they know lumber prices are coming down. And that one is a dangerous one to me, because that indicates potentially a slowdown in the sector, and it's something that we want to avoid.
For sure. All right. Look, Jerry Howard, CEO of the National Association of Home Builders, thanks so much. Your survey was definitely enlightening. Best of luck to you.
Shauna, a lot of Americans want to hit the road, or in this case, hit the skies. And how does $17 one way sound to you for a ticket? You heard me right. Frontier Airlines, that's one of the promotions they've got going on, but the ultra low cost carrier, their ticker symbol, by the way, is ULCC. Flights usually start around $39. Let's talk about all of this with the CEO from Frontier Airlines, Barry Biffle. It's good to have you here. And congratulations, you've launched flights from Myrtle Beach to, you ready for this? Buffalo, New York, Miami, Portland, Maine, and Providence, Rhode Island. But more important, you're predicting that you're going to be profitable in the second half of the year. How do you do it with such low fares?
We got to have the lowest cost, and we have done that for years now, and we've been a leader in the low cost space. But not only from an ex-fuel perspective, but from a fuel perspective, we have enjoyed a really low cost position that enables us to make money with really low fares.
Barry, talk to us about the trends that you're seeing, especially in the number of bookings. What are you seeing at Frontier?
So look, I mean, bookings have been surging for several months now. People have talked about the vaccine unlocking the demand, and that's what we're seeing. And, we're getting to the point now. I mean, I've been telling friends and family, if you're planning on going somewhere, you need to book it because, people are literally going to run out of seats because there's just not going to be enough demand. We've continued to add capacity as an industry, but we're almost back. Yet we're hitting records again with the passenger count. So I think by the time you get to 4th of July, from then through the rest of the summer, I think you're going to see huge travel. So it's time to book. If you see a deal, you should buy it.
We had Roger Dow on from the U.S. Travel Association recently, and he was pointing out that a big part of what airlines need is the return of business travel. And a lot of people make the mistake, we were told by a different airline CEO, that carriers like yours actually have a business travel component. Can you share with us the metrics? I mean, businesses want to save money too. Do you see a business traveler returning?
So we do see the business traveler coming back, and you're already starting to see signs of that out there. I'm seeing more sport coats in the last week. I'm seeing more individuals traveling with a laptop, which tells you what they're doing, right? But historically, we've been less than 5% of our travel is business travel. For travel motivation, it's typically small business travelers who pay for the tickets themselves, small business owners. But I think that they're already coming back, and I think by fall, I think once people go back to the office, I think you'll see corporate travel back as well.
Barry, what do you think the number is going to look like, though, when you compare it to pre-pandemic? And I'm talking about business travel. Do you think we'll ever get to those pre-pandemic levels again?
Well, I think you're going to exceed them. I mean, in the near term, especially, we're doing a charity golf tournament next month, and there was a lot of questions. Do we do this in person? And now that, the vaccines and the mask rules have changed, and we put this together, and we're sold out. We've sold out all the spots for our charity tournament, and just kind of shows you how everybody is ready to get back traveling and get back seeing people, not just in their personal lives, but in their business lives as well. And so I can tell you, I know my calendar's full for most of the summer, and there's very few days or weeks that I have left that I'm not going somewhere or seeing someone. So I think, look, it's just human nature. You want to see your friends and family, but you also want to see the people that you do business with, especially if you're in sales. And if you're not out there talking to your customer, well, your competition is.
It's really great to hear how busy you are, because for so long, a lot of us were worried about what happened with the airlines. I just want to ask you before we talk about, because you have international destinations, Mexico, for instance, how are you dealing with this phenomenon of the unruly passenger? Have you had any incidents with people who have just been rude to your staff or need to be perhaps reprimanded?
We have. It's unfortunate out there, right? I mean, I think it's gone on for a long time. I mean, we're now 15, 16 months into this pandemic, and people they're over it, and they're over the mask. They're over a lot of the things. And unfortunately, they've taken it out on their fellow human beings, and we're not immune to that. Yesterday there was the event, I think in Georgia, where unfortunately a woman was killed just for asking someone to wear their mask in a grocery store. And that's just terrible. But I just hope that we can all get back together and save that angst. But it is a real issue. But hopefully once the mask requirements go away in a few months, I think we'll have less aggravation on board.
When you take a look at the huge rebound that we've seen so far, have you been able to keep up with that demand? We've talked time and time again to so many business owners. Now, mainly it's small business owners, but it happens with big companies as well. They haven't been able to fill the positions that are open. Are you seeing that at all at Frontier?
Yeah, so we've seen that, and we're back to above 2019 flight levels, and expect to grow from here. And we'll be back to full utilization by the end of the year. But look, I mean, the shortage is real. We're hearing it from a lot of people. We actually got ahead of this. We kind of saw this coming. But I know that you look at TSA, they're having shortages. There's a lot of news about that. But I think these are just transitory. Look, once we get through the summer and everyone gets back to work, I think we'll sort out some of these labor shortages. But just like everything, I mean, it's like we don't need masks anymore, and now they're out of lipstick. So I think all these things will sort themselves out. Just give everybody a few months. I think the great news is the second half of this year is going to be fantastic for all parts of the economy.
Barry, you had me when I saw you went from New York LaGuardia to Miami, or what my people call the promised land. So we wish everybody at Frontier the best. Barry Biffle, CEO of Frontier Airlines.